Now let's take a look at the data for 19136. So this zip code is home to neighborhoods like Holmesburg and Mayfair. Let's look at the bigger picture. So this is not just a local issue, it's happening nationally and it has a direct impact on our market. The US housing market is now, the time on the market is much better than city as a whole, but again, because it's Northeast Philly and most of the Northeast Philly neighborhoods performing better historically than the city as a whole for rental market. And again, $1,200, it doesn't mean that the properties that were listed at $1,700 were closed at $1,200. Hi, everyone, and welcome back to the Philly Landlord Guy. I'm your host, Yuri Skripnichenko, the guy with impossible last name. Just think of me as the Philly Landlord Guy. I'm a licensed real estate broker here in Philadelphia and a certified property manager. My goal is to bring you actionable, straight shooting advice and hard data that you can use to make smarter decisions as a landlord and investor here in Philly. Today, we're diving deep into numbers for specific Northeast Philly zip codes 19136 and 19149. We are going to find out what is really happening, and I will give you some data for the city of Philadelphia as a whole, how we're doing as far as the rental market goes, and some updates on the national real estate market. So let's start with the raw market data. I've pulled some recent rental statistics for the month of August 2025. So we're recording this in September. And as I mentioned previously, we always have data for the previous months. We cannot give you data for September since it's not ready yet. But going back to that, I put local data from Bright MLS, which is our local MLS. And this isn't about sales. It's about what is happening in the rental market. And I'll give you a snapshot of the entire city first. Then we'll zoom in into the two spotlight neighborhoods for today's episode. So for all of Philadelphia County, which is city of Philadelphia, in August, the median listed rent was $1,850. And the median rent, it's actually closed at, meaning that the signed lease price was $1,821. On average, it took 48 days to rent a property in the city and 52 days to close on the rental, meaning that from the time when it was listed to the time when the renter moved in. Also, there is to note that the numbers, what we see in the report, the median rent and the closed number, it's not for this exactly the same rental properties or exactly the same time period. And what I mean is that if we see that there is 48 days delay, or it takes 48 days to close, so the numbers that we see in the report are for the listings that were listed 48 days before. So they actually not in the August report. So it doesn't exactly mean that if we see that the median price for rentals was $1,850 and the closed price $1,821, that it was just $29 discount on the rent. It's very hard to track that, but it gives you a general idea what is the actual rent, closed rent for the properties, and what is the asking rent. For 19136 and 19149, it will be a little bit different because they are smaller zip codes and they do not have as much data as the whole city. So we just operate with a few properties that were listed on the market during that time. And again, because of this discrepancy of the closed properties, how it's reported a few days later, or in this case, a month later, it doesn't mean that the listed price versus rent price is for the same rentals. Now let's take a look at the data for 19136. So this zip code is home to neighborhoods like Holmesburg and Mayfair, which are the parts of Northeast Philly. It's a solid owner-occupied area with a median household income of around $65,000 a year, which is higher than the city average of $60,000 a year. So in August, properties were listed for a median price of $1,700, but the actual rented median price was $1,200, and average time on the market 33 days. The time on the market is much better than city as a whole, but again, because it's Northeast Philly and most of the Northeast Philly neighborhoods performing better historically than the city as a whole for rental market. And again, $1,200, it doesn't mean that the properties that were listed at $1,700 were closed at $1,200. We have this 33 days on the market, so these are the numbers for closed properties that were listed last month. But even though it tells you that there is a significant difference in numbers, and probably the rental rates are dropping here, or landlords dropping to rent their properties here. Then we have 19149, which includes neighborhoods as Custer Gardens and another part of Mayfair. This area's median household income is slightly lower than the city average and at about $54,500 a year. But the rental data here tells a little bit different story. In August, properties were listed for a median of $1,715, and the median rented price was $1,800, was the same average days on the market of the 33 days. Again, take a note that both of the zip codes are smaller and we do not have that many properties that were listed and closed in August, so it's just between a few properties. But you can see that both of these neighborhoods have about the same median rent, listed rent of $1,700. So what you should take away from these numbers? First, the time to rent is still relatively high across the board. In both of these Northeast Philly areas, it's taken over a month on average to find a tenant, which is a huge financial hit if you have a vacant property. But there is, again, this interesting fact that the closed price in 19136 was $500 less than the listed price. But again, that can be just discrepancy because of how many days the property stays on the market. And for 19149, it was opposite. There was a small bump in the closed price. But again, that can be because last month's properties were listed a little bit higher. This leads us to another question. What is actually driving these numbers, and what do they mean for you as the Philly landlord and for your strategy? Do you need to change something? Before we move forward, I want to take a moment to thank our sponsor, TrustArt Realty. As a full-service property management company in Philadelphia, TrustArt Realty was built by investors for investors. We know firsthand how complicated managing rentals can be. That's why we're offering all of our listeners a free rental analysis or management advice session. To claim your free consultation, just send an email to trustartrealty@phillylandlordguy.com or click the link in the show notes to fill out a quick form, and somebody will get back to you to have that call. So moving back in to our topic, let's look at the bigger picture. So this is not just a local issue, it's happening nationally, and it has a direct impact on our market. The US housing market is now in a balanced state. It's no longer favoring sellers as heavily as it did a few years ago or even last year. In July 2025, a report confirmed that a 5.2% increase in total housing starts, meaning how many new constructions coming up, largely driven by a significant jump in multifamily construction. And US housing starts, particularly for multifamily units, are on the rise, and new construction across the Philly metro area is up as well, with about 1,600 new units approved through June 2024 and 2025. This added supply is putting more option on the market for renters, and they have much more options to shop around and see what they want or do not want. But this increased supply means more competition for existing properties, and the market is getting softer for older, less desirable units, especially in the markets like we were just looking at 19136 and 19149. Definitely older housing stock, not too much new construction, definitely no, almost zero new construction. So if you have some kind of new building coming up, it's definitely going to affect your property. You can't just throw up a listing and expect to get a bidding war anymore. In fact, a lot of properties are sitting on the market longer. Therefore, landlords who are not adapting to this changing tenants' expectations with clean, well-priced, and functional units will face longer vacancy periods and lower rents, unfortunately, and ultimately hurting their bottom line. So the key takeaway from the data is that the good old days of being able to get top dollar for any property are over. Even in the Northeast, zip codes is 19136 and 19149. The property sat for a month on the market and even had some slight change in the closing cost to actually to get that property rented. So what should you do about it? This market is no longer forgiving. It's now a game of strategy, not just luck. First, stop guessing on your price. You have to be realistic. Do not look at what a similar property is listed for. What is listed for, as you already know, it's not exactly the same number as what you will get for when you rent it. Look at what it's actually rented for. Get a fresh real-time rental analysis from someone who has access to the most up-to-date MLS data, or use reliable online tools that show what property actually rented for, not just what they're listed for. So there are a lot of different tools, and people are always or often citing tools like Zillow or Rentometer or even ChatGPT to analyze what the rent should be for their property or how to market it. I can tell you right away that none of those will give you real data. None of those have access to what the properties were actually sold for. What they can look for is what the properties were listed at, and that's it. So you definitely need to have access to MLS data to be able to make a good decision. Then focus on the tenant experience. With more options on the markets, tenants are becoming more selective. They're looking for value. It's not just about the price, it's about the condition. And in our previous episode, I provided a review by Rent Cafe that outlined what tenants actually looking for, what kind of utilities or amenities they're looking for. Is your unit clean? Is it freshly painted? Do all of the appliances work? Small cost-effective upgrades like modern light fixture or new sink can make a big difference in a tenant's decision to choose your property over a next door one. These are the details that separate the winners from the losers in this market. Finally, stay informed. This market is shifting fast. What worked last year may not work today. You have to be consistently checking the data, monitoring new legislation, and listening to what is happening on the ground in your specific neighborhoods. Even in the market as Philadelphia, a lot of people think Philadelphia is one city, everything is the same. No, it's not. We have so many different neighborhoods. What works in Mayfair is not going to work in Fishtown and vice versa. So you need to be neighborhood specific. The days of set it and forget it are over. But for those of us who are willing to put in the work, this new, more balanced market presents a great opportunity to acquire more properties and build a better portfolio for our future. So that's a wrap on today's episode. If you are finding this podcast helpful, please take a second to follow, rate, and review the Phil Landlord Guy wherever you listen, and do not forget to connect with us on social media. And if you have any questions or anything, any topics that you want us to cover, drop them in the comments. send us an email, and we'll try to get those covered as well for you. So until next time, keep buying smart, managing tight, and investing with purpose.